Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 4th, 2011, and this video is brought to you by Realtik. Alright, guys, let's get into the mix. We have a ton of things to cover here. The markets are getting slaughtered. Dow is down well over 300 points, down 353. That's 3% drop. NASDAQ is down 90 points, 3.35%. S&P 500 down 41 points or 3.25%. You can see the markets, how they had a nice bounce off this pivot low right here, but ultimately they're retracing back to a double bottom and the lows of the day. Now, bottom line, this is what's going on, folks. It's Europe. Last night, the futures in the U.S. were up because the Japanese government and the Japanese banks came in and intervened in the yen. They pushed the yen down. The dollar rallied. The markets liked that. Ultimately, once Europe opened overnight, the markets went straight down. Futures dumped. We weren't down that much going into this morning, but we were down significantly. The selling has continued today. Basically, Jean-Claude Trichet came out, who's the ECB chief there for the Europe, and basically talked some nonsense. You know, he's now all of a sudden going from hawkish to dovish, but he was in comparison and going against what other people are saying, other key players in Europe. It seems like it's a mess there, and they don't know what's going on. And I think that's what's worrying the markets the most, is that when you have all these heads of banks and so forth speaking one thing and then saying a different thing over here and over there, another thing, markets do not like uncertainty, folks. That's the bottom line. And again, you're getting a little bounce here. You haven't hit double bottom yet. You still probably do come to double bottom at some point today. If you break this double bottom, folks, you're flushing to the 120 level. 120 would be your next spot. Spiders right now down $4 on the day. The only positive for this market would be is if it could rally back above yesterday's low. See the low right here yesterday? If you got a big rally, you could get above that low. That would be positive going into tomorrow. Aside from that, it all looks negative. All right, and again, you have to just watch the levels, understand the levels. Yesterday, we had a great bottoming tail on the charts. On the daily chart, we had a big sell-off. Reversal, we closed positive. That was a positive signal. That 100% has been wiped off the table with today's move. Again, the only way that would still be positive from yesterday is if somehow we closed above that low today. I don't think that's going to happen. We'd have to have some sort of announcement this afternoon saying something positive from Bernanke or from Trichet or someone out there. Otherwise, there's no way the markets are going to get anything off the lows. Then they could even break down further today as the Dow continues to be down over 350 points. Notice the double bottom getting closer and closer down here. That's a technical level. Observe how you had a big drop here, and then you bounced, you went right to the 20 moving average. 20 moving average was resistance. It was 1, 2, 3, 4, 5, 6, 7. All right, 2, 4, 6 up candles. You guys know from webinar people who have taken the methodology in the Money Stocks webinar, that's a master signal right there of resistance. Sure enough, it has come all the way back in now. So again, stocks across the board are getting pounded today. We haven't seen a drop like this. And by the way, this is very reminiscent of 2008. 2008, when there was so much uncertainty and bank issues across the board, it's very, very close to that kind of feeling in the market. I traded through that with the chat room in the intraday stock chat at InTheMoneyStocks.com, the research center people as well. We were in that trying to make money in a crazy market and doing so. This market is a very tough market to trade. It's doable, but you have to maintain tight stops. You have to maintain, for the bounces, tight targets all across the board. All right, in any case, double bottom, you can probably be a buyer here for a small bounce on a scalp play intraday, but be very careful because if this low gets taken out and you close below it, you very likely flush to the 120 level on the spiders. That would be another $2 down from current levels here. All right, let's go over a couple other things. As the euro is now being looked at as more bearish on the price of the euro, the dollar has rallied significantly. Look at the move up in the dollar today, a monster move up. 31 cents on the UUP, which is the dollar ETF here. This again tells us that essentially what was said today by Trichet, the head of the ECB over there, essentially they're now switching from being hawkish to dovish, which means printing of money, accommodative easing policy. That's negative for the euro, which in turn is positive for the dollar. And the dollar is hitting new highs here, folks. Dollar continuing to go up. And again, remember, an up dollar is negative for the U.S. markets. Markets like a controlled, slowly declining dollar. I mean, this is amazing stuff, guys, right now. You're going to look back in history books at what's going on right now with Europe and here in the U.S. and be amazed. Now, remember, we do have the jobs number tomorrow as well, so that's going to be even another point. But honestly, I think the jobs number will even be secondary to what's going on in Europe, because if Europe continues to collapse, you're going to see some major downside still in the market. If Europe's able to stabilize as we go to the dollar, the spiders on the daily chart, if Europe's able to stabilize, then you have a whole new thing going on here. All right? And the market should bounce. This was a key trend line right here. Intraday, we're below it. It will be interesting to see if we recapture it by the end of the day. I'm not hopeful of that, but you never know. If you continue down, remember I said if you continue to break down through the lows of the day where you're going to go to the 120 level. That's right here. This is your next level. Gap fill, a gap window right there at 120 even number on the spiders. That would be a $17 plus sell-off from the highs just weeks ago. And again, look right here, folks. See this drop? This is an amazing drop on the spiders. You had a high pivot on the 21st of July put in at 135. You're now at 123. That's a $13 sell-off, basically a 10% sell-off in literally days. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, folks. 9 losing days out of the last 10 as well in the markets. Yesterday we had that one small reversal. There's your bottoming tail right there. Whenever a bottoming tail is closed below, that negates it. So if you close it today, which it looks like you will, below this pivot low, 100% negated. You have to go back into a possibility of more downside in this market until we get another signal of anything to the upside. Let's go over some other charts here. What's getting crushed today? Steel stocks continue to be under pressure. I think it's significant. You can see U.S. Steel here. I mean, look at U.S. Steel recently. It's collapsed all the way down. That's down about 6%. AK Steel is getting hammered even more, guys. Down 92 cents or 8.5%. Even some of the bigger stocks. Amazon's down $5. Apple's down 8.5. Google's down 17.5. And again, these stocks are still very high in the charts from their good earnings announcements, but nonetheless, I mean, you're just seeing the carnage out there. Take a look at Chevron, CVX today. And by the way, CVX, very interesting here. CVX just hit the 200 moving average right here on the daily chart. I actually do like CVX here as a possible bounce candidate. I'll say it right now. And the reason, again, is based on this 200. Look at the steep sell-off from 109 all the way back to 97. That should hold, plus you have this pivot area down here. You can see the 2 lines that were already on the chart from when we discussed this a while ago. That should be a very, very key level on the charts. Keep an eye on it, folks. Again, watch this level on Chevron. Let's take a look at Exxon, see if Exxon's even close. Yeah, Exxon's even uglier here, down another $3 on Exxon. That's taken out this pivot low, which is not good. The question is, where's your next level on Exxon? And I actually don't have a level until here. This area will be a very good level on Exxon, right in this area at around 73 to 73.50. See this little gap fill? This is the pivot high from the end of the year last year. That's going to be support right there. So I'd still let this thing fall to at least around 73, even number 73.50, somewhere in that range. And then that may be a good level to possibly pick it up. All right, again, carnage out there. Unbelievable craziness going on. We'll continue to see here spiders having huge volume. So again, it does make me wonder if we will see some sort of bottom in this market. Again, 300 million traded on the spiders already. But again, I don't think we've had that full out capitulation yet. That capitulation where it's just like a full out nutty sell-off. I'm not seeing that right now, all right, folks? So, again, keep that in mind right now as the markets are, again, down sharply here, nearing a double bottom. We just talked about that before. That'll be minor support. You should get a little bit of a bounce there, but it could flush through the way things are going. Look for a day of 400-plus million, and that would be the significant. That would probably be close to the highest volume of the year. I think the highest volume was in March, the pivot top right here when we did about 450 million. So this would get very close to it if we can get over 400 million. Right now we're at 300 million at a little after 2 o'clock in the afternoon. This is a wild environment, folks. I mean, absolutely insane, the kind of stuff's going on right now. You're seeing the panic out there. This is the full-fledged panic. Again, I'm staying on the sidelines in terms of longs until we get some sort of signal here. We just tagged double bottom. There you can see your bounce coming in. See, we tagged this level right here, 121.76. You're already back to 121.91. So right there's your scalp live here, folks. Again, double bottom. You got a 15-cent, 16-cent scalp right here. It could even go a little bit higher, but what you do is you take half off the table here and put a break-even stop. Again, you have to be in protective mode right now. There's too many crazy things going on in this market. And again, you know, this is reminiscent of flash crash type stuff, that panic, that fear out there. You want to be on extra point to be extra careful right now. It's not worth taking any extra risks and giving away money. Again, great bounce off double bottom, but at least have half off the table there and put a break-even stop. Okay? Let me see if there's anything else I want to see here going on. Scanning through. Nothing really that I'm seeing there. I think that'll be it for today, folks. Come to the intraday stock chat. Take the free trial. Take the free trial to the Research Center. 7-day free trial. You can find us in there. I'm doing posts continually throughout the day here on the hot charts, which is inside the Research Center, keeping everyone up to speed on what's going on. Chat room, I'm giving live analysis. And again, notice how you're hitting this level, getting a bounce. But again, after you get a bounce, break-even stop is key. because it could easily flush through. All right, guys, enough said. Enjoy. Be careful in this market. This is where you need the best guidance available. That's what's here at In the Money Stocks. Take care.